Hey folks, Twisted Christian. Today I want to discuss the Securities and Exchange Commission, the SEC chair, Gary Gensler, interview that he did on Fox Business Network. And I think this is going to give more insight of where his head is at and what is coming down the line. But one of the things is that when he was first picked for the SEC position, I knew that this was done by design in a good way. A lot of people have criticized Gary Gensler, but when you actually do the research on his background, and if you've watched any of his MIT professor courses on cryptocurrency, you will see that he is very pro cryptocurrency. And a lot of, he's gotten heat because he's not coming down enough on the hedge funds and stuff like that. But then when you look at the news and you look at the information, you look at what they're doing, they are. And my thought was this, that when you are put into a position to make change and you have government corruption, political corruption, you have hedge fund corruption, you have whale corruption, it's very difficult. You think he's just going to go in there and just start sending out subpoenas, in which he has been doing, but not at the rate that people want him to. And they want him to make these arrests and all this stuff. You're not going to go in and do that to politicians. You remember, he might be the head of the SEC, but he still has to report to the very people who are taking advantage of the system. And you're going to see a lot of those subpoenas, and you're going to see a lot of those charges against individuals and hedge funds, and they're already doing it. I do believe that there will come a time when you're going to see massive subpoenas go out, and you're going to see a lot of people in trouble. You already see what's happening with the politicians and how they were trading during our economy downturn and making millions of dollars. Both parties. So let's go ahead and get right into the interview. So this interview is on the Fox Business Network YouTube channel, SEC chair on Ripple saga, register within the law.
Crypto in the crosshairs again. News breaking this afternoon that the Securities and Exchange Commission is scrutinizing the relationship between the U.S. arm of Binance, that's the world's largest cryptocurrency exchange, and two trading firms with ties to Binance's founder, Changpeng Zhao. The Wall Street Journal is reporting that the two market maker firms, Sigma Chain and Merit Peak, have been controlled by Zhao, but that those relationships were allegedly not disclosed to investors or customers. This latest news only adds to the very detailed focus the SEC has been giving to the crypto space, and as the multi-trillion-dollar market for digital money continues to grow, investors eagerly await news on how the SEC plans to regulate it. Let's see if we can find out and get some news here. Joining us now on a Fox Business exclusive, SEC Chair Gary Gensler.
Right, she's talking about Binance. Right now, there's been a lot of prophetic words about Binance. So if you're using Binance, I would use it with caution, because I believe that there's going to be subpoenas going out and Binance is going to be heavily fined and whatever else that's going to happen to Binance. So if you have Binance coins, I want you guys to think about that. If you guys, if any of you are holding on to the Binance coin, or you have a lot of crypto on that particular exchange, that is probably the one exchange that has some of the most devastating prophecies. So the only other thing that I've discussed with Binance is that there's going to be probably flash crashes on Binance. But only the experienced people who are Bitcoin fishing should be doing that. If you're just now getting into this, then you don't need to pay attention to any of what I'm saying about Binance. I don't use Binance. I have a Binance account. And I said I'll probably put like $50 on there to try to fish for Bitcoin when that time comes. And then if I do catch anything, it's coming off the exchange immediately.
Let's see if we can find out and get some news here. Joining us now on a Fox Business exclusive, SEC Chair Gary Gensler. Welcome, Chair Gensler. We appreciate you being here.
Good to be back with you, Liz.
Look, I know you don't speak to individual cases, but on this breaking news about Binance, can you tell us why something like a crypto exchange not disclosing relationships with market makers is an issue, or would be an issue, for the SEC?
So let me take it to a little higher level. Most of the activity in this asset class, as you said, $2 trillion, is happening on centralized exchanges or lending platforms. And you saw yesterday we had an announcement that I can speak about with regard to one of the large lending platforms. And why does it matter if 95% of the activity is happening there? What's important is investors get basic investor protection against fraud and manipulation. And as many of the tokens on these platforms may well be securities, that's where the Securities and Exchange Commission comes in.
Well, you're talking about the BlockFi settlement, where BlockFi paying out $100 million for handling or at least putting together, allowing people to park their crypto in an exchange, at least an account for a pretty incredible monthly interest payment. You said that those were unregistered and that they have to register. Is BlockFi now registering? Can you at least give us an update on that?
Well, they entered into a settlement arrangement to do so in a timely way. And importantly, what we found there is that not only was it not complying with what's called the 1933 Act or registration, but also the Investment Company Act of 1940, offering the public returns by pulling those assets and investing those assets, the crypto assets. But we're working with them. We're trying to see if we can get this whole area, these crypto exchanges and lending platforms, inside an investor protection envelope. And then if the public wishes, based upon that, to invest or even to speculate, that's up to the public. But to have the basic protections of protecting against fraud, manipulation, to have disclosure, these are the things that we have in our stock markets, and really important if this technology is going to go anywhere.
Okay, now folks, I've said this for a while now, that you are going to see a lot of the same regulations in the that are in the stock market, in the cryptocurrency market. That's coming. So when we hear about certain individuals like the creator of Shiba Inu, or we hear about the creator of Bitcoin and maybe some of these other coins that you don't know who they are, with these laws put in, we're going to find out who they are, because they're going to have to file reports with the SEC. So this is what he was talking about, was basic investor protection. And I think this is a good thing. You know, it might, when this happens, it might bring down the markets when they do start forcing these platforms to register. That's going to happen. And he talked about the $100 million fine with BlockFi. That's insane. So when they start cracking down like that, folks, this is just one, right? And he's not doing it all at once.
Well, I get it, because you want to protect investors, and I truly believe that that's at the heart of what you try and do. But it has been an exponential growth spurt that we have seen. I mean, did you see the Super Bowl, Gary? All of those crypto commercials, they had him calling it the Crypto Bowl.
Well, but just think about this, Liz. In 2005, the advertisements of this Super Bowl were a bunch of mortgage companies like Ameriquest, which that was right into the 2008 crisis. Back in 2000, there were 14 Super Bowl ads about .com companies, many of which went defunct later. So I wouldn't sort of confuse the advertisement with the credibility behind some of this or the viability of these projects.
Well, let me tell you why I'm not. Banks have advertised in the Super Bowl. They've gone under. Certain, drink companies. It's part of sort of the free market, and I understand that this is very much a brand new and nascent investment operation or opportunity for people, but it really feels like it's been a transformational 12 months. I mean, you look at how many people and businesses are choosing to invest in or accept cryptocurrency. So I want to get to the SEC's approval of futures ETFs, Bitcoin futures ETFs.
So before we get into that, all the hype around the Super Bowl, right? All these different cryptocurrencies and platforms are advertising. And then people were actually going on social media expecting some type of immediate rise in cryptocurrency. And we didn't really see that. So a lot of people were trying to make money off of the hype, knowing that they're just commercials, right? Just because you have a commercial or an actor is doing a commercial on behalf of a platform does not mean that these cryptocurrencies are going to shoot up all of a sudden.
My question to you is this: you've rejected a bunch of offers when it comes to Bitcoin spot ETFs, whether it was Skybridge or all kinds of names. You had Grayscale's application that's being assessed at the moment. You've rejected Wisdom Trees, Fidelity, Krypton. Cite every single time the SEC cites, you need more to know about how they're going to prevent share manipulation, fraud, and lack of liquidity. What could any of these funds that are dying to get their ETF out there say to you that would get you to yes when it comes to preventing manipulation?
Well, again, I don't want to get ahead of any specific project, and it comes in front of our 5-member commission. But generally speaking, what's really important is these underlying markets, Bitcoin and the other markets, the underlying cash markets, are trading on exchanges, and those exchanges, I continue to say, come in, work with the SEC, register under the securities laws. It's probability weighted, but you've got 75 or 500 or thousands of tokens on your platform. It's pretty unlikely none of them are securities. So we did this working with BlockFi, trying to find a path forward and protect the investors at the same time.
So all these companies that eventually that they want to do business within the United States, that they are going to have to register with the SEC. So that's why we look out for some of these different platforms. There's a lot of platforms out there, folks. There's over 470 something platforms. And I think we might talk about at most maybe 10 or 11 platforms altogether on this channel. And there's going to be a lot of platforms that will go away. And there's going to be a lot of coins that are going to be going away, and we'll get into that here in just a moment. When you have like Shiba Inu, XRP, and then you have these platforms and stuff, they're all going to have to register all their information with the SEC. That's what's coming down the line if they don't want to be fined or banned.
But here's where I get confused. If you're comfortable with a futures ETF on Bitcoin, why are you not comfortable with a spot ETF for the underlying security of the futures ETF?
So let me just walk through a little bit. The staff looked at this very closely over a number of years, actually. And Bitcoin futures that you referenced, trading on the Chicago Mercantile Exchange. That Chicago Mercantile Exchange has had a regulated market since 2017 by our sibling agency, the Commodity Futures Trading Commission, an agency I was once proud to chair. So you should know, I think really well of the CFTC. So that's part of that framework. We don't have that framework for the underlying cash market at this time.
Okay, I want to move on to a lawsuit that the SEC has filed with against Ripple XRP. And again, without commenting on specifics, because I know you don't, what's the SEC's theory on certain elements of the crypto world that are considered securities, which would subject them to the SEC's stricter purview, versus currencies which are not held to that kind of purview?
So it's pretty straightforward, actually, is that in the 1930s, after the collapse of the markets and the public getting defrauded, there was a basic bargain, and Congress wrote with a very broad brush the definition of security. And they included 32 different terms. And amongst those terms, the conceptual framework was the public investing money, anticipating profits on the efforts of others. And the Supreme Court in the 1940s and multiple times since then have had the same approach. My predecessor, Jay Clayton, said it as well as I could say it, that in looking at these tokens, it's rare to find one that isn't doing that. The public is investing, hoping for a profit based on the efforts of some other group.
Okay, but that's with any investment. There is that caveat emptor, buyer beware element to all of the stock market. What confuses a lot of people, Gary, and if you could really clarify here, is, where do you draw the line, the distinction between what is a security and what is an actual currency? Example A, what Ripple did, selling XRP to build out its underlying blockchain network, no different than example B, Ethereum floating an ICO, a coin offering, to help its underlying Ethereum blockchain. There is no difference, a lot of people say. None.
So Liz, you started by saying you weren't going to ask me about specific cases. And so if I can help the audience.
Example A, example B.
Yeah, but I help the audience know that it's not, I'm not really allowed to talk about specific cases, but it's pretty straightforward. Raise money from the public, as you say. You have a basic bargain of full and fair disclosure and anti-fraud protections, and you register with the government agency called the Securities and Exchange Commission. And that's really what we're trying to do, is help continue with that basic bargain. We're technology neutral. If people want to invest or speculate in this field, then these tokens, and most importantly, the platforms, the trading and lending platforms, come in, register, do it within the law, not trying to skirt the law.
Okay, so folks, if you listen to everything that he said, this is all about regulations. It's all about registering with the SEC, and that if the public is investing in something with a hope of a return or getting back some type of return, and somebody else is doing that on your behalf, it's those situations where it needs to be registered. So I think that includes probably most cryptocurrencies. There's a current, I think, over 17,000 and something cryptocurrencies. So if you're putting money in any of those cryptocurrencies in the hopes of a higher return, then it has to be registered. Right? He talked about the platforms being registered. Lending program platforms register. And we talked about that with the South Korea exchanges and how many actually were not able to make it through regulations. We're going to see similar regulations, folks. So people aren't just going to be able to just send crypto back and forth to some unknown address, right? Just like it is in South Korea. That's all coming down the line. And so when it hits, it's going to hit hard. So if the cryptocurrency industry isn't paying attention to about what's getting ready to happen, if these other platforms are not prepared, and you get a call from Gary Gensler, then there's going to be some issues. So he's saying right now, come to us, so that you can get registered, right? So he's warning all these platforms and all these crypto organizations that they need to come in and register.
Okay, we've got so much more to talk about. I do want to quickly ask you about payment for order flow. This, of course, was an issue that came to the forefront during the meme stock craze a year ago, January. The question became, is it a conflict of interest? On the one hand, I do get that there are people who look at this situation and say, well, wait a minute, brokers are getting, are getting paid by market makers just so that individual investors can have free commission trades. On the one hand, it is helpful to the market, but is an answer to ban payment for order flow, Gary, or simply solidify disclosures so that investors can make their own decision about whether they want to pay a commission and not deal with a market maker?
So we're looking at the SEC as to how to facilitate and drive greater efficiency in this market so investors get a better deal. Payment for order flow, as you mentioned, is a payment between a broker that a broker receives for your order flow, and there are inherent conflicts of interest there. We're looking at how we can ensure greater competition. When you place a market order in the U.S., a market order at a retail platform, well over 90% of those trades go straight to the dark market, to a wholesaler that bought that order flow rather than competing trade by trade. And that's what we're trying to think through under the authorities we have.
Sounds like there are a lot of open doors that we need to get inside and look more deeply into. Chairman Garrett Gensler, thank you very much for joining us. We appreciate it.
I want to go over what he said about limit orders, because this was a pretty big issue with the whole GameStop, AMC. And if you listen to the words he says, he is supporting making changes, because he said that there was conflicts of interest. He said it, that there are conflicts of interest, that they're trying to resolve this. And he talked about when you place a market order, 90% of that goes to a dark pool. It's absolutely insane. So he knows the numbers, right? And so he's coming out with those changes. And again, that's why you're probably going to see some drops in the stock market, or you're going to see subpoenas with certain hedge funds and all this conflict of interest. We've heard about Robinhood getting the hammer from the SEC. So we've heard those prophecies. Right, so we know that's coming. Also, when he was saying the market order, that's why I say, folks, you don't put market orders in. Say if you wanted to buy XYZ stock, right, and it's trading around $25. You don't go in there and hit market order and just buy, $200 worth of, whatever stock, right? You want to put it into a limit order. That's why I've been trying to share for a long time about limit orders. I've been doing it now for over a year and really focusing on how to put in limit orders. So that pretty much wraps up the conversation. And listen to the whole thing. The link is going to be down below in the description. You got to give him time. He's fighting a big, massive, corrupt machine. If you heard any of the testimony when he was before Congress and he was talking, they were questioning how payment for order flow was good and then that they should leave it in place and it's good for investors. He has a complete different opposite opinion of that. He says that there's a conflict of interest, while the members of Congress is saying that it's not, and it's good for the markets. And there's only a few people in Congress that actually think that payment for order flow is bad. But a lot of them, because they're being paid by the hedge funds, and this is well documented, well known, that a lot of these people who spoke up when Gary Gensler was talking about payment for order flow with Congress, that these people actually had donations from hedge funds. So you understand what I'm saying, that everything that he's trying to do it for the retail investor. So I'm really excited about Gary Gensler and what he's getting ready to do. But I think we also need to watch out what's getting ready to come, because he's telling these folks, look, come and register. So a lot of these crap coins, if they don't come and register, they're going away. None of these platforms are going to be able to offer those coins, and those coins will tank. I don't care how popular that coin is. So that's why I say, folks, in this first run, there's a lot of cryptocurrencies that there's been a lot of cryptocurrencies that if you're holding on to, you may not want to be holding on to them. There's a lot of crap coins out there that have been promoted or are being promoted. And you need to be careful. You don't know how this is all going to work out with like MetaMask, PancakeSwap, a lot of these swap sites. What are they going to do? They're going to have to register too, folks. When it comes to the coins, when you're dealing with one of the largest economies in the world, that's going to be restricting a lot of coins because they're not registered with the SEC. It's going to change a lot of things. All right, folks, that's all I have for today. Hopefully you guys have learned something. If you guys want to watch this video in full, I actually have watched it. I think this is the third time I've watched it. It's so interesting. You got to pick up on the keywords and what he says, and that's how you know that he is pro crypto and he's for the retail trader. And you guys, if you guys haven't looked at his MIT professor course on cryptocurrency, I encourage you. There's maybe 8 videos or something. But I learned a lot by listening to what he was saying. And that's how I know he is. When you listen to the classes and he's dealing with the college students, and you can see that he enjoyed teaching young people and teaching about cryptocurrency. So that's all I have. Thank you guys for listening. God bless. TC out.